So we got your credit pulled in here, and it looks like your score is a 719.
That can't be true. My credit score is a 790.
Well, where do you monitor that?
Credit Karma.
Okay, so Credit Karma uses a different scoring model than we use on the mortgage side. What they use is probably called the Vantage scoring model, where we use the FICO scoring model. So it is not uncommon that your score is going to be higher when you see it on your end than for the mortgage. In this video, I was talking about credit score, and I need you to understand the importance of credit score and across all three bureaus. And you're going to have different scores when you look at your scores through any credit cards or Credit Karma, things like that. So always think when you do check that, it's probably going to be actually showing a little bit higher than what your mortgage report will actually be. And that's not a bad thing. So just make sure that you try to keep that score as high as possible. If you need to add like non-traditional or self-reported utilities to your credit bureau by Experian Boost, please go ahead and do that as well. Always make sure that you have at least 30% utilization and below for any credit cards that you have out. 10% in utilization is best, but definitely no more than 30% to keep your credit scores as high as possible. Do not co-sign for anybody for any reason. If it's life or death, I don't care. Do not co-sign for them, okay? Because if you need somewhere to live and you can't buy a property because you help them buy a car, that's going to be real bad unless you want to live in that car. But no, in all seriousness, you want to make sure credit is everything. If you have good credit scores, I like to call it walking on water because you are literally God when you have good credit scores. You can get anything. You can get a business loan. You can get a personal loan. You can get a home loan. You can get credit cards. If you don't have credit, you don't have shit. You really honestly don't, because you can't get anything if you don't have good credit. There's only so much you can buy with cash in the bank. And if you don't like, you don't like putting information out there for, personal, for identity fraud and things like that, don't worry about that. You can monitor your score, and you can also freeze your credit so nobody can ever pull your credit without your consent. So just understand when you are monitoring your scores, it's most likely going to be, in our experience, a little bit higher from those ancillary agencies that report than an actual mortgage tri-merge.
Angelo, you just talked about having bad credit and not being able to get the things you want. Let's just say you have somewhat of a decent credit. How much more of a cost will your mortgage payment be if you have a less, a not superior credit? Like, have you seen that in your past where you see someone that, has like decent credit, but they can just use Experian Boost and boost that up and now have a better credit score to pay less on their mortgage payment every month?
Absolutely. Yeah, absolutely. I've seen Experian Boost raise credit scores as much as 25 points in a matter of like 5 minutes, however long it takes you to get that on Experian Boost or to go through that process. And that could be the difference of $20 to $40 to $100 between mortgage insurance premium, interest rate, cost for the interest rate. Everything matters. The difference between a 690 credit score and a 715 credit score could be thousands over the life of the loan, and thousands to get into that loan, depending on if you want to pay points or that. So just to give you some sort of example, let's say I don't know exactly what today's rates are, but let's say with a 690 credit score on a conventional loan with 5% down, let's just say the interest rate is 7.125. With a 715 credit score, that cost for that 7.125, let's say, is, $550. Well, the cost for that 7.125 rate with a 690 credit score could be in upwards of $2,300 just to get that same rate. Not to mention the private mortgage insurance, which they use factors. And every credit score tier, every 20 or 40 points, is a different mortgage insurance premium factor. So you could be paying, let's say, $120 monthly for your mortgage insurance premium with a 715 credit score. With a 690 credit score, you could pay an upwards of $190 to $200 a month with a mortgage insurance premium. So it's not just the interest rate; it's the cost for the rate. It is the mortgage insurance premium, and it is the interest rate. So it's threefold, I would say, when it comes to credit score. So you have to at all costs, you have to make sure that your credit is pristine to get the best possible terms out there.
Love that, Angelo. Team, it's very easy. If you need to pull up your credit score, I used my FICO. I thought a past friend from high school was, using credit in my name or like identity theft, and I got that all cleared up. But I got the report. It was like 10 to 20 bucks. It wasn't that much, and I got a long report of my credit history and credit score. So you can do that as well. Obviously, Angelo said you can use Experian Boost to boost your credit score, and both of those links will be in the comment section down below. And we will catch you guys in the next video. Bye.